Oh, welcome back to another episode of YouTube Analysis. I know I've been on break for a while, but definitely there's been some action in the market, as we can always see. So what are we going to get to first? We're going to be going from the beginning in chronological order as of recent updates to see what has happened in the company. Then I'm going to go over what I think about the seller and what the outlooks are on the company. So this has been my little golden long-term play, which I'd call. Although I'm not in with a huge size, I do look to build if it goes any lower towards the support levels. I do see some potential negatives, however the positives in this case outweigh it for me. And being a cynical investor, something that buys my attention is something that I'd like to invest in. So, the most recent RNS, or the most earliest RNS, was the Holdings RNS. This was released 2 days ago, on the 11th of April 2017, just before market close. I believe at 19 minutes before market close. So, what we can see is a Holdings RNS for the seller. The seller is Aviva PLC and their subsidiaries, but more specifically, both Chase Nominees Limited and Chase GA Group Nominees Limited. It says that the transaction occurred on the 10th of April, where I think 3 million shares were sold, or even more, my bad. Just about 9 million shares. And from the other one in indirect shares, those are additional. So, 9 million shares approximately have been sold. Supposedly on the 10th, the volume doesn't link up in my opinion. I think they've been selling small lumps into rises previously before that, and then when it topped off, they kind of went straight for the threshold. And as you can see, that's why the share price was rising, because quite potentially the market had known that the RNS was listed. We're not talking market investors like us, but we're talking about market makers like the brokers. The ones who are the MMs, they're putting their price orders on the shares, and when you see the book turns, potentially that RNS has been logged. So as you could tell, the seller was taking an opportunity to get rid of more shares. Quite potentially that could be RNS, and the market was thinking, okay, the trading update is going to be great, as we all suspect it to be, especially with strong oil prices and the company's recent growth. So the share price has spiked to, I think, 3.03, highest ask paid, or 3.04, I believe. I had my finger to buy more, but it didn't break that resistance. It had to break that 3.04 plus mark. Then you could target anywhere from 3.5 to potentially 4.5 on the upside. And I'll show the chart later. But before I do that, I'm going to go to the trading update, which was released the next morning. So I'll be back with that shortly. So here is the trading update. This is the Q1 trading update released yesterday at 7 AM before market had opened. So it begins to say that the performance of early 2017 was quite strong. Q1 2017 had 25% growth. So the volume must have been higher than 7.7 million. The Transformer sales are also expected to grow, considering they have 2 revenue streams in this, and it was much better than it was in 2016, with the recovery of Canton, and their margin is looking better, so you're looking at much more chances of profitability. So, if we go over this, usually the beginning of the year is the most difficult time, especially with feedstock issues, and I mean they mention it here, collection of it, the availability, those are the rough things to be able to get. But if you look at Q2, it's also beginning positively, and possibly that shows to say it's much better than Q1. So you see there's still growth. How strong this growth is, we don't know, but it's quite possible. We'll go over their EBITDA now. So what they're saying is they were EBITDA positive at the end of 2016, I believe, also at the start of 2017, and they're expected to grow further as well. So they've already outlined they are EBITDA positive. So there's no major problems for the start of this year. The margin is being strong for them, especially by oil prices rising. And when they're talking about oil continuing to stabilize, since that last update for quarter 1, since quarter 2 now we are in, the oil prices increased, I think, 8 to 10%. You know, you've gone from $48 crude to about $53.90, which is quite a significant build. You know, that looks for more profitability. I mean, there's backers of this company like Andrew Black, the guy who's setting them up with the facility for working capital. He also has a large portion of the company. The only thing that came to a question in my mind was this final statement here. The board continues to monitor its working capital position for its current requirements, whilst also looking to ensure that the company is well positioned to take advantage of improving market outlook. The working capital position for its current requirements, usually you shouldn't mention that if you're not having problems. I mean, I don't suspect there's anything wrong, but I think maybe that could be the reason potentially that the market had not reacted, you know, in a hugely positive way. The share price had fallen, I believe, from 3 pence to 2.4. Now I think that's on the bid as well. If I look on the last trade, 2.4 in the bid. Yes, that makes sense. It is a shame to see that this has happened, but are we seeing potential growth and potential profitability on a potential great recovery stock for the year? I'm thinking it's possible. I would like to buy in on support. That would be a gift from the gods, as they say. Chris Ellis, you know, is silent with PR, but he gets all the work done, especially in recovering the company. But if I go back to the, I think it was the financial statements of 2016, it did say they had 16 million in, I think, liabilities, but most of these are funding from Andrew Black and purchase of the asset, but their current assets are valued at 48 million, so 16 million in liabilities is nothing, and that's great for a normal working company, considering you need to have debt on an asset, which is normal. So I don't see a huge problem with that, or any problem at all. I do see there's potential growth, but one thing we have as a problem as shareholders is a seller. Once this seller potentially leaves or stops selling, which we thought they weren't selling, as we had no holding RNS since February 14th, I believe, till 11th of April, you're talking a month, maybe 2 months. I think 3 days less than 2 months, that's it. It was quite irritating because we thought they'd have been loading off quicker, but hey, I've got time to go through one more key metric, which is the chart. So now I'm going to be going through some small Fibonacci figures. So if we see what our major support line is at 2.322, I'd probably say 2.28 on bid, 2.35 on ask. So I took a midpoint in the Fibonacci line and I kind of lined up here. And then we're looking at next major resistance lines. Hopefully on the recovery this won't be a problem. As you can see, the major problem was weak oil at $27, I think up until January 2016 we see around here. It's a 2.6. Ideally, without a seller, you'd have looked for a double, right? Because their sales, immediately the prices have doubled. Because $27 to $56 now, I think, which is just over doubled. We'll count it as doubled. That should have recovered the share price to about 2.6 times to 5.2. Right now we're trading at 1 times earnings, which is very undervalued for a business like this. You'd look for probably 2 to 4 times earnings. It's got a reasonable RSI level. You target these higher levels, but until the seller's gone, you'll just see consolidate on support, spike, consolidate on support. Once they rinse, you'll see a breakout of here, then a breakout potentially there. Then you're seeing those orbit targets of 6 to 8, which peaks off around this level. That's it for YouTube analysis anyways. Best of luck, and let's see what the future beholds.